Okay, so number 14, and in number 14 we have furniture depreciated during the month $500 and machine $800. Okay, so dear students, what we have here in number 14, you see what we have debited here: depreciation account debited, and accumulated depreciation of furniture and accumulated depreciation of machine account credited. Okay, why here we are debiting depreciation account? The reason behind, because depreciation is our expense account, and increase in expense account is debited. So we have some depreciable or depreciable assets like furniture, building, car, all of them are depreciable assets, and by the usage or by the passage of time, when they are used, they decrease their value. So the decrease in the value of assets over its useful time, we call it depreciation. So that is why depreciation here debited $1,300 and accumulated depreciation of furniture credited and also machine credited. Okay, what is accumulated depreciation of furniture? We have a main asset account, and another we have contra asset account. So the contra asset, these two are called contra asset account, and the value of accumulated depreciation of the main accounts, they are deducted from their respective account in the balance sheet. So that is why we say increase in accumulated depreciation of furniture is by the meaning of decrease in the furniture. So we say the contra asset account is having the opposite rule of the asset. When the asset increases, we debit it, but when the contra asset account increases, we credit it. So here the accumulated depreciation of furniture and accumulated depreciation of machines, both of them are contra asset account, and we say increase in the contra asset account, they are credited. The reason, because increase in the contra asset account is decrease in the main asset account, and decrease in the main asset account is credited. So far we say increase in accumulated or contra asset account should also be credited. Okay, so depreciation or depreciation account debited because it's increase in expense account, and accumulated depreciation of furniture account, that is decrease in the main asset account and increase in accumulated depreciation account. So these two accounts here increased 500 and 300, and increase in both of them, that is credited. I hope you got it, the idea and the concept of the contra asset account. Okay, next, number 15, we have borrowed from bank long-term loan $60,000. Okay, now we are borrowing. Number 15, what we are borrowing? Cash debit $60,000, and what is credited? Bank loan. Okay, dear students, why bank loan? Okay, because the bank loan is a liability account. Okay, let me explain it. Cash, because increase in asset, that's why debited, and bank loan is a liability account, and we say whenever liability increases, so we credit it. So think about it. When you borrow loan from a bank, so liability account increases, means a business becomes liable to pay back this amount. So that is why we have a rule: increase in liability should be credited. Okay, and number 16, we have owner drive cash for personal use $2,000. Owner drive cash for personal use $2,000. Okay, now what is happening here? Drawing account, that is debited, clear, and what has been drawn? Cash account credited. Okay, drawing how much? 2000 and cash account credited 2000. Dear students, what do we mean by drawing? Whenever the owner is drawing something from a business for personal use, okay, sometimes the owner is drawing cash, right, for personal use, and sometimes the owner is drawing goods or asset. Anything can be drawn from a business by owner for personal use. So whenever something is drawn by owner for personal use, then we are debiting drawing account. Why? Because the drawing account, that is the nature of the drawing account, is decreasing capital. So drawing account is decreasing our capital account. So that is why we have a rule: when our capital account decreases, we debit them, and so the drawing is also decreasing our capital account. So that is why we are giving also a rule to drawing, that when the drawing is increasing, we are debiting them. The reason why, because the increase in drawing is by the meaning of decreasing in capital. So I hope you got it. So that drawing is having somehow the rule of that is having same rule of expense, right? Because expense is also decreasing our capital, and drawing is also decreasing our capital. So that is why drawing and expenses, when both of them increases, we are debiting them. Okay, in the cash we credit, because when we draw the cash, when the owner is drawing the cash, so the cash is credited. Next we have paid government taxes 500. Okay, number 17. The government, okay, we have paid taxes. The business is paying taxes. So what is taxes? Taxes is actually expense account for a business. Okay, before this, let me tell you about the drawing. Why we cannot call the drawing expense account? Some students are confused. They say, why we cannot call drawing expense account? Why? Because there is a difference between expense and drawing. The nature is not same. Expenses are incurred in a business for the purpose of generating the revenues, but the drawing is not generating the revenue. Why? Because when you draw something, so that is not helping in generation of the revenue, right? So that is why both are different. So number 17, paid government taxes. Okay, the taxes, that is our expenses, is increase in expenses, debit. So we say taxes account debited, right? And what we have paid, cash, so cash account credit. So taxes $500 we debited, and cash $500 we credited. Okay, so I hope you got it, what we mean by taxes, that is expenses, increase in cash, that is asset decrease. Okay, next we have transaction number 18, that is paid interest $800. Okay, dear students, you must know what is interest. $800. What is interest? Interest, when you pay it, that is your expense, but when you receive it, that is your revenue, that is your income. So for the bank, when they receive interest, so that is their revenues, right? Okay, paid interest. Now a business is paying interest here, so it is expense for them. Then what we are doing here, number 18, interest expense account debit. We debit it. You can write along with expense, and also you can simply write interest. But why? Because when you pay it, everybody knows that it is expense, so there is no need to write expense, or you can also write expense. Okay, so interest expense debited 800, and you have paid cash. Why? Because you are paying cash for payment of interest, $800. So I hope you got it. You have learned what we mean by the last transaction. Okay, let me add some other transactions too. Okay, 19. For example, you are receiving interest. Possible receiving, yeah, received interest, right? $500. If you have or your business received interest, then you should credit the interest and you have to debit what? Cash. So look here. Okay, so what we have, number 19, you have received what? Interest. So cash account debited and interest you have received. So interest received account credited, or simply you can write interest account credit. Why? Because you have interest, right? You have received interest. So cash you have received how much? That is 500, and interest credited 500. Okay, dear students, and at the same time cash increases and also interest in our revenue increases. Both of them, cash asset increases and interest revenue increases, and it's been, this transaction is affected both side of accounting equation. In the left side, our asset cash increasing and is increasing, and the right side, our revenue interest is increasing. Okay. For example, I'm just adding one another transaction. Sometimes businesses they are raising fund, they are financing. So when they are financing, clear? So we have a transaction like this. For example, business issued shares, right? Issued shares, yeah, 1,000 shares for $10 each. Okay, what does this mean? It's mean now a business, if it is corporation or giant stock company, so now a business is issuing some shares, and the purpose here is to raise fund. So how many shares are issued by a company? For example, 1,000 shares, right? Okay, and what is the share, the value of the share here? You can say the share issued at par value, right? $10. There is no additional premium capital, and we say that $10,000 is coming now. Why? Because you are issuing share, and per share value is $10, right? So cash is coming to you. So what is the transaction? And I have to record this transaction now. Number 20. You have to debit cash, okay, and credit. We are crediting what? Shares, or you can say capital. Simply, in if it is partnership or firms, individual businesses, we simply credit the capital. But if it is the corporation, we are crediting what? We are crediting stock or shares, or you can say we are crediting total shareholder equity, right? So here we say simply that we have risen shares, right, and we have risen the fund through shares, right, and the shares is credited here. So the cash debited how much? $10,000. And what is credited? Simply we credit capital, or you can credit stock, right? You credit stock. By stock means here the shareholder equity, or you can say shareholder equity. If it is a joint stock company, we are crediting shareholder equity, clear, or a stock. How much? That is $10,000. Okay, what we mean by this transaction? Cash because it is asset increase, and here our capital increases. So when the capital increases, so we are crediting it, and when our asset increasing, so we debit it, so cash debited here. Okay, I hope you got it. So one more example, let me edit here, number 21. For example, if the company issued bonds, 1,000 bonds for $500 each, for $500 each. Now again the company is raising fund, but here what is the procedure? The company is now raising fund, right, through the help of what? Company is now in 21 raising fund by issuing bond, right, by issuing bond. So you can say again cash debited, how much? Oh, here is $500 each, so we have 500,000, sorry, cash is $500,000 we are raising. And how much bonds we have issued? Okay, 1,000, and each is by $500. So you can say bonds payable liability. This is also our liability, and that is 500,000. Okay, dear students, look here. This is liability. What is a bond and what is share? This is another huge topic. Share is whenever a company is issuing share for the purpose to raise money. But the difference in the bond is also when a company is issuing bond, is also a company is raising money. But the difference in both of them, and the share, that a person, the investor, is becoming a shareholder, right, of the company and receiving a dividend. But by investing in a bond, the bondholder or the creditor is not a shareholder. He is called a creditor, and he is receiving the interest. So we say the share, if you are raising fund through shares, so a person who is investing, so he is called a shareholder, and the fund you have risen is a capital or shareholder equity for you. But if you are raising the fund through bonds, so the fund you are raising is your liability. Why? Because it is not like a share. That is liability, and you have to pay it back after 5 years or 10 years or whatever time is specified in the bond. So once again, on the bond a company is paying interest, but on the shares a company is paying dividend. So both of them is a process of raising fund, right? So here the bonds payable is a liability of a business. So that is why we say a company is liable to repay the bonds at the maturity, means after 5 or 10 years. So we call this bonds payable, this liability is called bonds payable. So in simple words, cash debited and bonds payable, our liability increased here. So I hope you got it. It was really easy and simple, and still there are lots of transactions. And let me also write one more transaction about the interest, just to mention if we are paying and receiving interest. For example, if you remember, here we have some transaction, sold goods and account 30,000, and for cash 6,000. Okay, here is a person, for example, you have sold goods to him, and now you are receiving back cash from him, and you have given in the credit term, in the sale term, you have given him a 10 days discounting period, and you told him that if he is returning back the amount within the 10 days, then you are giving him 2% discount. For example, we have transaction like this: 22 received cash in advance, cash from Ali, right? $10,000, and allowed him 2% discount. So look here, we are receiving cash from Ali $10,000 and we are allowing him 2% discount. Okay, so much easy. Have to record this transaction, dear students, very much easy. Let me tell you, we have 22, transaction number 22. Okay, receive cash from Ali 10,000. So now when you allow him 2% discount, it means you are not receiving completely 10,000 cash. So you have to deduct 2% discount from this 10,000. And what is the 2% of 10,000? That's 200. It means you are receiving cash, right? Cash debited, not 10,000, 9,800. Clear? And now you are allowing discount, so this is called discount allowance, allowed. Discount allowed, that is how much? That is 200. Clear? And what is credit? Account receivable. Okay, how much? Completely 10,000. Okay, dear students, very much easy. Look here. Now you are debiting cash account, not 10,000, 9,800. The reason behind why, because you are offering him 2% discount, which is 200. So it means you are receiving 9,800, and discount you have allowed him, that is 200. So increase in cash, that is debited, right? This is our cash debited, and increase in discount, you have paid discount. It's been discount. When you pay discount, this is your expense. Keep in mind, when you receive discount, that is your revenue, that is your benefit, so we are crediting it. But when you are paying the discount, that is your expense. Clear? So receiving the discount is a benefit, so increase in benefit is credited. But here we are not receiving it, we are paying it, so that is why 200 we debited. That is our expenses. And finally we have account receivable, and account receivable is 10,000. Account receivable is our asset, but the asset is decreasing here. When you collect cash from your customers, so definitely what happened, your account receivable, your current asset is decreasing, so it decreased here, so we credited it. Okay, now one more transaction in the final transaction, that is about 23. Paid, for example, Ahmad $10,000 and received 2%, and received from him, right, 2% discount. Okay, dear students, now we are paying to whom? To Ahmad. How much? $10,000, and receiving from him discount. Clear? So look here, have to record this transaction, very much easy. $23, debiting account payable and crediting cash, and also crediting discount received. Okay, account payable debited how much? $10,000 completely, and cash credit 9,800, and discount credited 200. Okay, dear students, what does this mean? This means now you have purchased goods and account, right? And the seller told you that if you return back this amount, $10,000, within 10 days, then the seller will give you 2% discount. Assume you are paying within 10 days, right? The 23rd date is the 10 day, or it is within the period of 10 days, assume, and you are returning the amount. But how much is the amount? That is $10,000. But luckily, because of the discounting period, you are paying within the discounting period, the company or the seller is giving you how much? 2% discount. I think it is 10,000. Clear? It's mean account payable, the liability totally decrease. The total amount of liability 10,000 decreased 10,000, and cash account credited. Why cash? Because we are paying cash. How much? 9,800. We are paying 9,800, not 10,000, because we have received 2% discount. So decrease in cash, credited 9,800, and discount received. This is a benefit we have received. Now revenue, income, benefit, whatever, when we get some benefit, so we credit it. So that is why discount received we credited. Like we have a rule that whenever revenue, income that increases, so we credit it. So discount received also increased, we credit it. So I hope you got it. In today's lecture you have learned all about transactions, and I think almost we have covered all types of transactions. If you have any question, so you can take a screenshot, right, and share with me in your group, and inshallah we will discuss about it. And after this lecture, in the coming class, we will discuss the trial balance, the ledger accounts, how to make ledger accounts from the general journal entries. So wish you good luck. Assalamu alaikum wa rahmatullahi wa barakatuh.